Hey everybody, welcome to the Moving Markets Podcast. I'm your host, Jeffrey Dunyan. Today is Thursday, the 18th of January, 2024. U.S. markets have been closed for a little over a half an hour, and I'm going to take some time right now to bring you up to speed on what happened today, what to look forward to for the next couple of days, primarily tomorrow since it's the last trading day of the week, and give you my insights. Make sure at the end of the presentation you click to like the presentation, sign up to subscribe to our YouTube channel or whatever venue you watch this on. We'd love to have you as a regular listener of our program. Enjoy the presentation. We ended up with a pretty nice day. Not a bad day at all for as far as the markets go. As you can see here, these are the closing prices. Dow Jones up 200 points, S&P up 41, NASDAQ up 200. Percentage-wise, NASDAQ really had the best day of the three major indexes. You can see the Russell was up 0.5% as well. Dow Jones up about 0.5%, and largely, not entirely, but largely on the backs of a rebound from Boeing, a big move up today from Apple, respectively. Those went up 4% and 3.25%, and very solid moves over 1% on Microsoft, Caterpillar, McDonald's, and CRM. I think they were all better than a 1% return. So you get some heavyweight companies like that are up more than 1%, in a couple of cases 3 and 4%, then it's easy to bring the whole Dow Jones Industrial Average up 0.5%. Were it not for a pretty good sized sell-off today by United Healthcare, they were down a little over 1.5% today. And United Healthcare, that's the heavyweight. That's the 800-pound gorilla when it comes to the Dow Jones Industrial Average. It's the heaviest weighted stock, trading at over $500 a share. So were it not for United Healthcare giving up a full percent, you could have easily seen the Dow Jones Industrial Average up maybe 1%, which would have been, 350 to 400 points to the upside. Still 200 points, very good day for all three indexes. The move up today by I'm going to focus on the S&P. The move up today very much coincides with this narrative that I've been talking about, that we're probably going to wobble a lot. We're probably going to see a lot of these near-term, short-term ups and downs. Now, I am still of the opinion, even with today moving up a little bit, I'm still of the opinion that over the next quarter, maybe quarter and a half, we probably still get a slight downward slant. A couple days ago, I mentioned this, that we'd probably get something that looked a little bit like this over the course of this next quarter. I could be wrong. Earnings might come in better than expected. Guidance might be better than expected. But I think there's a lot of headwinds for the market right now that are going to be difficult to overcome. One of the biggest things is that escalations continue to ramp up in the Middle East. You've now got Pakistan firing rockets into Iran, sending planes in there. I'm on CNBC's website. If you click here on the Middle East crisis, there's a lot going on and a lot you could read about and a lot of stuff that has that possibility to be, the next big tinderbox, so to speak. There's a really great chance that things escalate and get worse than they already are. And while for the time being it ticked up a little bit today, but while we stay in the low to mid 70s on oil, you may not see a lot happen with the economy and a big sell-off in the market. But I got to tell you, I don't think this can last much longer. I don't think it's going to be very long before tensions in the Middle East are going to create a more dire situation, and you're going to see oil prices jump. I think before the halfway point of this year, I'm going to make a prediction right now that before the halfway point of the year, oil is trading over $90 a barrel. More than 15% up from where it's at right now. And that is going to make things tough in the economy. When the price of oil goes up, the price of everything goes up, and you're going to see inflation numbers tick a little bit higher because there's little to nothing being done right now in the way of helping small business owners, cutting taxes for businesses, creating a less regulated environment for businesses. There's really none of that going on right now that favors increased productivity and increased business in the country. And until you have that going on, you're going to have these ebbs and flows in pricing, a lot of it based on bond rates, a lot of it based on the interest rate. You're going to have these different things going on, and it's going to be difficult for prices to remain in a relatively neutral position. I remind people almost every day, whether it's in a personal one-on-one conversation or whether it's on something like this with members of Safe Option Strategies or others that tune into our program, you've got inflation still going up. It's just not going up as fast as it was going up. It is not and has not come down yet. I thought this article was very interesting today. The Fed's Fed chair or Fed Gov, Raphael Bostic, is basically saying that cuts are probably going to happen, but not until the third quarter. You've still got people that believe that we're going to have rate cuts as early as March, and I just don't see it happening. I just am not of the belief that that is on its way. Let's talk a little bit about what was driving things today. This morning, we had the housing starts and jobless claims, and I'm going to focus in a little bit on the jobless claims number. This number that came in at 187,000, this is the best number, I believe, in about 3 or 4 months. The number has pretty consistently been in the low to mid 200,000s. This is the number of new unemployment claims that took place in the week of the week ending the 13th. So you've got this number at the lowest point that it's been. And initially, that had the markets trading down this morning or pretty flat because, honestly, part of the Fed's mandate is full employment, but the Fed also knows that without some pressure on the job market, without some pain in people's ability to spend and full employment, that it's hard for them to have a reason to lower rates. The rates are more likely to stay a little bit higher if the employment numbers continue to look really good. Now, we saw some information a couple weeks ago. I don't know how quickly I might be able to find the article, but a couple of weeks ago there was a major, massive revision on some jobs numbers. There was a cut in jobs numbers of almost 500,000 for a short period of time, I think for 1 quarter. And these numbers oftentimes get revised. You can see that it was only revised up a little bit last week, but this is one that I think you might next week see a larger revision on. I don't know if I'm buying the 187,000 new unemployment claims. I think that number is probably going to be a little bit higher. So initially, this spooked the markets and had things trading off a little bit today and selling off a little bit in the early going. But the markets turned on the day. It's interesting if we go back to the markets here and we pull up this chart and look at the 1-day intraday movement. You can see that right around 1:30 Eastern time, can't really zoom into this, but right around 1:30 Eastern time, right there, things got on a roll and just continued to move up in a very, very steady fashion. I wasn't sitting in front of my computer at 1:30. Actually, I think that would have been 1:30 my time. That would have been about 3:30 Eastern Standard Time, I believe. But I wasn't sitting in front of the computer right then. I don't know what specifically happened right at that time that caused things to move. I suspect that earlier this morning, the 10-year bond rate was up higher than this 4.1. I think right at the open this morning, I saw that it was up 4.17 or 4.18. My guess is that eased back a little bit. Let's go to the 1 day on this. No, maybe not. Maybe not. I expected I was going to look at this and see that the bond rate had eased a little bit, but the 1 day move right here shows that throughout the day it continued to gain a little strength and get a little bit higher. Interesting. I honestly, most days I can tell you exactly what happened and why the markets turned and went more positive. The Nasdaq was up from the very get go this morning, and the S&P was up from the very get go. But it took a little while for the Dow to get on board. I know Apple. Um, Settling some lawsuit stuff and sort of getting past that with the Apple Watch. I know that has helped things, and Apple being way up today. And then, of course, Boeing been so beat up on over the plane issues and the safety issues that for Boeing to have a day and a half of big rebound, especially today's big rebound, that was incredibly helpful for the Dow Jones, and Boeing started a little more tepid and then gained strength and finished strong today. So that's some people looking for some bargain shopping on Boeing. It's a function of algorithms showing that the stock is oversold, and it may or may not last. I think Boeing could be heading back down to 180 where it was just a few months ago. In fact, I wouldn't suggest being bullish on Boeing until you see it get down and hit 180. So that's kind of where we're at with the markets today. As we move into the final day of trading tomorrow, let me get that back on your screen for you really quickly. As we move into the final day of trading tomorrow, we've got the one other report that I think a lot of people are going to be looking at for tomorrow is going to be consumer sentiment. Existing home sales is definitely going to play a role, but consumer sentiment tomorrow, it's actually expected to be a pretty decent number. I'm not sure. I kind of think that number might tick down a little bit below that. I don't know if a small miss on that number is going to be enough to really shake the markets and cause them to do something drastic. I don't know if a major beat, something that's up in this 72 and a half range is going to be enough to really move the markets up dramatically tomorrow. I think if you look at the last couple of weeks, and if you look at this week, let's go back to the S&P specifically. I think if you look at the last couple of weeks and specifically this week, you get an up day or two or three, and then you get a couple of down days. And I think we're going to cross over technically sometime in the next week or two as earnings come in. We've already done so on the MACD, got close yesterday on the RSI, but I think sometime this coming week, maybe not tomorrow, we're going to get this technical crossover, and you're going to see, again, the beginning of a repeat of a pattern like this. Not a massive major sell-off, not a real deep sell-off, but something that's more of a gradual sell-off. I can't help but feel like that is on its way. All right, that wraps it up for us for this Thursday. I hope you had a good day of trading. Hope the markets being up today were beneficial to you and your portfolio. Make sure you join us tomorrow. Tomorrow, we are going to unveil, I know it's kind of late in the month already, but we're going to unveil our Safe Option Strategies watch list. I'm going to give you the top 5 companies that I think you should have your money in for this calendar year, whether you're doing some of the spread trades that we do, whether you're doing some of the collar trading that we do. These are companies that I think are going to profit and benefit you if you put your money there, regardless of what the overall markets do, regardless of whether we get a bearish market, which I am leaning towards a little bit this year, or we get a bullish market, or we get something just volatile and crazy. I'm going to unveil the official 2024 Safe Option Strategies watch list. So make sure you join us tomorrow. We'll try and get it posted tomorrow. It's going to be Friday the 19th. I'm going to try and get it posted within a couple hours after the stock market closes for the day, but for sure it'll get out tomorrow evening. At the latest. Make sure, like I said at the beginning of the presentation, make sure you click subscribe to our YouTube channel, or if you're watching this somewhere else, make sure you like it and be a part of this every single day. And make sure you go to sostrades.com if you want any information on how to become a full member of Safe Option Strategies. One of the benefits of being a full member of Safe Option Strategies is we send out trades every single week. By the way, we closed out a trade today, the last one that we opened for last calendar year. And with the closing of that trade in profitable territory, we returned 114% on the year. Those are real results. We can show you the portfolio. We can show you the trades we put on. Members of our program who subscribed, more than subscribed, they actually purchased a program from us, and you can get deals about that on sostrades.com. If they followed every single trade we published and sent out to our members last year, they would have seen 114% return on their portfolio. As the last 2 years in a row, we've had over 100%, and our average is over 70% a year on these spread trades going back for a long time now. So make sure you take a look at that. But at the very least, free of charge, subscribe to this update and get filled in on what we're thinking about and what we're doing. And hope to see you back again tomorrow. Thanks. Bye bye.